Well, hi everyone. Welcome to the Buffett and Beyond ETF report for June 29th, 2024. And yeah, housing ETF is a bluff right now. And remember, folks, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And let's look at the QQQs, and this was last week's chart, and we came over here and we saw this top being made, and we came down here and we saw this black line starting to turn over. So let's bring it up to this week, and now we're looking at it and we see that it went up. There's that top that we were talking about right in here, and then it went down for a couple of days and then back up and is testing this top right now. And I'm recording this intraday on Friday. QQQs, this ETF has been up, it's been down, trying to break through up there. But if it doesn't, and it does turn down, then we have this sell signal in here. And also, if we zoom in on this piece right in here, it looks like the black line has crossed over the red line. But again, this is intraday, so by the end of the day, something can change. And don't forget, this is the last trading day of the month, and the last trading day of the month usually has, or the last 2 days, usually has an upward bias. And don't forget, this coming week, we go into the 4th of July. That's a holiday, and the market has an upward bias going into the holiday. And new money comes in the beginning of every month, the IRA money, pension money. So the last 2 days of a month and the first couple of days of the following month are usually an upward period. And then right away we're into the 4th of July, which is a holiday. So we have the indicators that are telling us this market wants to go down, but then again, we are in an upward biased period of the market, being the end of the month, beginning of a new month, and also a holiday. So this is going to be a fun week coming up, folks. And just take it off because the 4th of July is on Thursday and nobody wants to go to work on Friday with the weekend right ahead. So we're going to see a lot of action right up till Wednesday, and then after that it'll be a non-event for Thursday. Well, the market will be closed, and then Friday it might be open for a little bit, but not much action, or it won't mean much whatever action we do see on Friday. Now let's look at the housing, but the housing was going down, drifting down, but we are stuck at this bottom in here. We have not broken through this bottom. And this indicator up here is still giving us a buy signal in here. And problem is, down here we have a sell signal, but is this black line starting to turn up a little bit? And don't forget, housing filters down throughout the rest of the economy, because as houses are being built, you have carpenters, you have heating, ventilation, air conditioning systems, you have plumbers, you have the electricians, you have roofers, puts everybody to work. And right now, new housing sales have slowed down because interest rates have gone up. So we do have a housing shortage. The problem is people can't afford them. So that's what's happening with housing. But housing is so much of our economy, folks. And boy, oh boy, if this holds in here, we're golden. If it doesn't, that'll mean not the economy slowing a little bit too much. But we had numbers come out this morning saying that sales have decreased just a little bit month over month. And that means the economy is slowing. And I'm not talking about homes, I'm talking about retail goods altogether. So if that can pick up, if housing can pick up, look, you have couches, knives and forks and spoons, and dishwashers, and all of that. It affects the economy so much. So this is so very important right in here. We will keep an eye on it during the week, folks. And here we are at the transportation ETF, and the transportation ETF is staying above this 200-day moving average. And this week it went above the 20-day, which is this green line, went above the 50-day, which is this blue line. We want to see the green line cross above that blue line. And today it's acting very, very nice, down here, we've had a buy signal for the past week or a couple of weeks or so. And this is very, very nice in here. It's giving us some hope. So at least the transportation seems to be picking up. And transportation really transports the raw materials to the people who put the dishwashers, the clothes dryers, everything together, and then they transport it to the retail stores, and then people buy them. So what the transports are telling us in a slight way is that people are starting to buy, or I should say people are trying to transport or are transporting raw materials and finished goods. So we'll see how this holds out. So we have some good things happening here. And the problem is now we have the XLK, which is the technology sector, which is having trouble reaching this prior high in here. Still above the 20-day moving average, still above the 50-day and the 200-day. Problem is up here, we're seeing this black line cross this red line, and that's a sell signal. So technology is starting to have a tough time, and we're going to see the results of that in a few minutes here. And then we look at the semiconductor. Semiconductor has already given us a sell signal down here. But up here on the day, it is now back above the 20-day moving average, which is this green line. So that's a good sign all of a sudden. So maybe we'll get a turnaround in here, which would be nice. And then let's look at the sector stars. And this is the portfolio that we made up, because the key to ETFs is to pick out the best stocks in the ETFs. Let's call them the above average stocks. Pick out the above average stocks in any ETF, and all our research and our actual portfolios show that works very, very well with ETFs, picking out the better stocks. The problem is that some of these sectors only have 3 or 4 stocks that are above average stocks. They're smaller ETF, but they have some important stocks in them. So what we've done is say, okay, rather than being a portfolio with only 3 or 4 stocks, let's make a ETF sector stars portfolio in which we'll take some stock, the best stocks from the XLK, the technology, which is the technology ETF, the XSD, which is the semiconductor ETF, some of the housing stocks, maybe a transport stock or 2, and put them into one portfolio. And this has about 17 stocks in it. And we are up 27.8%. If you're hedged, if we're timing the hedges, we're up 23%. And if you're constantly hedged 30% of your portfolio, you're up 12.8%. So that's pretty good, folks. And last week we were up, if you just had the stocks without any hedging at all, you were up 28.2%, and now you're up 27.8%. So the stocks fell, what are we talking about, 0.4% here? And the timing fell about 2.7% in here. And if you're constantly timed, you fell less than 1%. So that's where we stand right now. Now, don't forget, the S&P is up as I got these prices midday on Friday. The S&P is up 15.7%. So if you've had the top stocks in this portfolio, you're up almost double the S&P 500, which is pretty good because the S&P is doing pretty good too. And if you were hedged or timing your hedges, you're up 23.3% versus the S&P of 15.7%. Very, very nice going in here, folks, with these portfolios, even if you're timing the hedges a little bit. So when we get to the QQQ portfolio, which is really one of our very favorite portfolios, so and remember, the QQQs are the NASDAQ top 100 stocks minus any financial stocks, and we still have Tesla in this portfolio, and we're going to show you why in just a second. But look at all these other stocks we have in here, and folks, they're all large cap stocks, up 35.9%. And folks, this is very, very nice. We actually went up 0.2% from last week, which is nice because remember we showed you the charts of the semiconductors and the chart of the techs, and they're kind of rolling over. But our top stocks are up. 0.2% from last week. If you're hedged, you're up 33.1%. So the QQQs have become our favorite portfolio, really. And I said one of our favorite portfolios because we also like the Sector Stars portfolio, a little bit more diversified, and we're into a few housing stocks in that other portfolio. When those housing stocks come around, we think the Sector Stars portfolio will outperform the QQQs. But what are we talking about? We're talking about 35% here, while the S&P is up 15%, so we're more than doubling the S&P 500. And if you're hedged or timing your hedges, you're up 33%. And even if you're hedged 30% of your portfolio all the time, you're up 20.2%. And folks, with the market up 15.7%, this is a pretty good return in here. So no matter what portfolio of ours you're using, you're ahead of the game. And our 30 stock growth portfolio, as of just the other day, was up to over 21%. Now, very few of you have these exact same numbers. Why? Because these portfolios are weighted exactly the same amount of money in each one of these stocks. And I know some of you like to sell covered calls on stocks, so you want more, at least 100 shares of a stock. So you're not balanced the way that we are. We are balanced by putting equal amounts of money into each stock. But if say you're writing some covered calls on some of them, you might have 100 shares or 200 shares of one stock, but only 50 of another, and you're not weighted the exact same way we are. So those of you who don't have these same returns, not to worry about it because your portfolio is a little bit different than ours. But our research going back, about 34 years and actual portfolios going back 22 years all show that the equally weighted, in other words, equal amounts of money into each stock, and all our research and just about our growth portfolio, just about every year, we rebalance at the end of the year and change a few stocks, and don't do it during the middle of the year. This was one of the few years where we changed a few stocks in our growth portfolio, which we're not showing here. But we usually don't do that. We like to hold on to stocks, and we'll use timing in there every now and then, which will help our returns as we go along. Now, let's get back to Tesla. Tesla is still in this portfolio. We took it out of our growth portfolio, but we kept it in this portfolio. Why? Here we go. Here's Tesla, and this is the past 6 months of Tesla, and you can see we had a gap here, we had a gap down here, and we have a gap all the way over here. And the rule of the market, now this is not a clad rule or anything like that, but usually stocks go up and fill these gaps. And so we are up here and we are approaching a day moving average, and we have an up signal down here in our intermediate term indicator. We have a buy signal, and we really thought it was going to fill this gap, and it has, folks, because we draw this line all the way back, and look at this. The bottom of this gap, or I should say the top of the gap, but the bottom area just before the gap happened, if we follow this all the way across, here we are again. Now, the key is Tesla going to break through this 200-day moving average or not? And since we took it out of our growth portfolio, we may take it out of this portfolio. It all depends what Tesla does relative to this 200-day moving average, because it really already filled this gap. And now it's just about to test this 200-day moving average. It will be a good test of this stock. And we'll know maybe this week or maybe next week whether we're going to keep Tesla in this portfolio. As I said, we kept it in this portfolio, but we did not keep it in our growth portfolio. So, folks, we had a tumultuous week, love that word, a week where the market was up, down, testing. The semiconductors and the tech stocks are having a difficult time, but the market just does not want to break. And we'll see what happens coming into this next week, which will be a short week, a short trading week, and a holiday, and the beginning of a month with extra money coming into the market. So we should see a general upward bias. And then we'll see what happens the following week. That will be the big test. Meanwhile, folks, go out, forget about the market, enjoy this weekend, get yourself ready for the 4th of July. Go out, be with your loved ones, have Sunday dinner with them, and just enjoy yourself and take your mind off the market. And guess what? The market will be back open on Monday, and Tuesday we'll start our daily letter, and we'll be back with you for the rest of the week. Maybe we might even take Thursday and Friday off, but we'll see. Anyway, most of all, be with your loved ones and stay safe. We'll see you this coming week, folks.